Tuesday, October 18th, 2016. Maneco 64, home of alternative economics and contrarian views. It's around 9:30 a.m. London, so 4:30 a.m. New York or Eastern Standard Time. I'd like to talk this morning, basically give you a quick update where we are in the markets and also a technical look at gold, silver, the mining shares. And so we start here. Gold is at 1262, so up $6.5. The high has been 1264, so it's basically broken out of that range we've been between 1250 and 1256, 58 this morning, moving up well. The Dow is up 83 points, 0.5% as well, 18,168. Nothing's changed on the chart of the Dow, which I've showed in previous videos. We're just like basically trading between 18,000 and 18,300 or thereabouts. Not much direction for the last over a month or so. So silver is at 1765. That's up almost 20, well, up about 20 cents, so up 1%. Silver doing well. The pound has rebounded a little bit. It's at 122.35. That's up 50 pips or 0.4%. So, excuse me, got a cold. So let's go to the look at the technicals now. And actually, I'm going to start out with the gold chart. And this gold chart is a weekly chart going back to the end of 2014. And what I've done actually is I've done a Fibonacci analysis on it. And the Fibonacci analysis, basically you take a move from one point to the other and you measure, the retracement. The golden mean, of course, is 61.8% of the move, or 38.2. That's the Fibonacci law, the golden mean. I'm not going to go into exactly why that is, but a lot of markets, sometimes when they correct, they stop at the golden mean, which is 61.8 or 38.2, and a lot of times also 50% of the move. So there is sometimes consolidation between the 50% retracement and the 61.8 or 38.2. So here I'll bring up this gold chart, and you can see since the low last year in December at around 1045, we moved up to a high earlier this year in July and around 1376, and we've been correcting since then. And this 50% retracement of the move we've had from the December low to the high this year is 1,212. The 38.2 retracement is 1,251.17. So, and the low has been 1241, and you can see in the chart there, we've been consolidating these last couple of weeks, not moving that much. We are breaking up above 1260 today. This chart is from last night. It doesn't really matter for the purpose of the Fibonacci retracement I was talking about. So you can see, yeah, it's holding the 38.2. So we haven't gone down to the 50%. We might yet do, but it's difficult to say. Technical analysis is not an exact science. So that line, trend line coming through from above, that's from the high in 2011 and 12. So so that's the gold chart. So basically consolidating here. I have to say it looks like we're forming a little flag and we could go down, but you never know. A few weeks ago I thought we were breaking out and we were consolidating and we came down. So this is just to help people. This is really for traders, people who are trading, for investors who buy gold or silver, stackers. Yes, it's interesting to look at the price, but I'm not concerned about short-term movements myself. So let's look at silver, and silver. I did a chart as well. It's a weekly one, and it's coming. Same kind of chart as gold. The low in December last year was around 1366. So, and the high this year has been just above 21. Excuse me. So I'll bring up the chart here now. The silver correction, as you can see by the Fibonacci analysis, that's been sharper in terms of percentage. We are testing that 50% level. We went through it, but now we're back above it. The 50% retracement is around 1740, 1739 for silver. So yeah, this morning we are up a bit. We're around 1760. As I said, this chart was made last night. So, but for the purpose of this analysis, this chart is fine. So that 1740 level, 1739.40, then the important level, 50% retracement, Fibonacci. So now I want to go and look at one of the mining stocks I follow, mainly because it's a stock that used to be just a silver company, but now they're getting into gold. So it's got a mix of gold production and silver production. And the reason I'm talking about the mining shares, because they might sometimes, be they bottom later than gold did. Gold bottom in December, and mining shares bottomed later on, earlier this year. I think it was January, if I'm not mistaken. So yesterday, there's two main indices for the miners: the HUI Gold Bugs Index and the XAU Index. The HUI yesterday closed above 200, around 203, I think. It was up 1.67%. That 200 level was a key level, and the XAU Index finished up 1.5%. Even though gold didn't move. So that in itself is not a bad sign. Maybe the mining shares are gonna, have bottom before gold, and they're starting to move before it. I don't know, but I'm just letting you, see what's going on. So the mining company I look at is one of the oldest mining companies in the U.S. It's listed on the New York Stock Exchange. It's called Hecla Mining. So I've done a weekly chart here as well, and I've done a Fibonacci analysis, and it looks like we also have a formation for me. So here's the chart. Fibonacci analysis shows, we've gone from a low in the beginning of January around just below 150 to a high of around 727 earlier this year. And it looked, sharp correction. It was 38.2% of the move, as you can see, roughly 38.2% retracement. Fibonacci is $5.04. And as you can see, that looks like a bull pennant. So that's a bullish formation normally. And I say normally because these formations sometimes do not work. They're not, as I said, technical analysis is not perfect. So it looks like we're consolidating. And if we can get back above, that line, which is probably coming in around $5.75, and definitely, above $6, then you could say this was just a correction and we're going to go back up. So that's Hecla Mining, one of the mining shares I look at. And then the other thing I've looked at, a lot of it is because I'm here in the UK, and the pound is the currency that we use here. But as I said before, I think what the pound is doing, or sterling is doing, is a precursor for the dollar. So I brought up this chart of XAU GBP, which is basically the pound in sterling in gold in pound sterling. And as you can see, we made the same bottom in December in the pound. just above 700, well, around 700 pounds, the gold price. And we've moved up quite sharply, you know. It's up 40% in gold terms since the beginning of the year. Brexit has helped, but even before Brexit, we had a move up. And then we consolidated, and after Brexit, it's gone up. And as you can see, we're forming a perfect bull pennant in gold, in British pounds, and it looks like it's trying to break out of that of the top of the pennant, or triangle. Actually, it's a bullish triangle. So, and why, you know, the way the pound, the gold price can move in pounds is whether if the pound drops a lot, which it has already, and but the fact that, you know, gold has moved down, so it's kind of compensated for it. So I personally think maybe the pound will stabilize a little bit for now, and then the price of gold will start going up in dollars. That's maybe what this is indicating. But a bull triangle there looks or a triangle, it looks pretty clear there. Of course, as I said, it's never an exact science. So yeah, so that's the technical view for the precious metals and mining. Of course, those charts look very interesting. And we do have the elections coming up soon in the States. I think it's in 3 weeks' time now, November 8th. I think that's going to be a huge event for the markets, no matter who wins, in my opinion. So as I leave here, gold is at 1262.50. The Dow is 18,170, or up 84. Silver is 1766, up 20. The pound is 122.45, up 0.5%. And what have we got as news here? I'm just gonna quickly browse through. Excuse me. I mean, I haven't seen why the stock market is up this morning like this. I will update you later, but yeah, that's it for now. So if you enjoy my videos, please like them, share them, and also subscribe to my channel if you haven't yet. And if you'd like to donate to my channel, there's some links below in the description. Thanks for watching. Bye.